Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A bullish long white Mariposa yesterday and a second bullish white soldier. The market slammed through the congestion from August 2014 between 101.55 to 103.35 as if it wasn't there, and rose up through the free area above it until it almost reached the next congestion area from July 2014 between 106.75 and 108.65, where it halted on approach, no doubt thinking that breaking the back of one congestion zone was enough for the day. Additionally, as I've previously mentioned, this second congestion area seems the more effective right now. Looking now at the whole action in 2022, you could regard the late December to date move action as a possible big M pattern. This pattern has not been triggered as yet, and yesterday's action made it even harder, but it also came awfully close to triggering it last Thursday. So far today, well, a lower open, but then a tentative, very tentative test higher to the first resistance at 106.79 before pulling back to the open and looking like an indecisive doji cross right now. Spot gold. A second consecutive indecisive spinning top yesterday. This time the market had a long tongue on it. The market is still caught in between the two declining tines of two separate pitchforks. Overhead we have the middle tine, currently 17.23, of the April to June bearish shift pitchfork, whilst below we have the lower tine, currently 16.97, of the March to April bearish shift pitchfork. As I said recently, I suspect this is more a case of the market getting squeezed between these two tines from two different bearish shift pitchforks from two different time periods. This now brings up again something I've been talking about since last month. You see, there is an argument for the November 21 to date action being a possible really big head and shoulders pattern. We are past forming the second shoulder and looking like we are heading lower. If that is the case, then we have a primary target X below in the 1676 area, or where the March 21 low is, with a harder to achieve secondary target in the 1560 area, well below the bottom of my daily chart. Now, you may be wondering, those seem a little small to be targets for this move down. Well, I can explain that. You see, I used the April high at 1998 in my calculation rather than the more extreme high at 2070. I would rather err on caution than fail in excess. Support below the market is interesting. It comes from the August 21 low at 1684 and obviously the March 21 low at 1676. Now, so far today, initial move lower, but the market has since turned back up, though the range is still relatively small. Above we now have the September 21 low entering the frame at 1721, just under the middle tine. We are still within the range of the toothpaste tube from which prices are currently caught. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.